What's going on, fellow investors and stock market traders? My name is Jeff. In today's video, I want to talk about NIO stock. How really since its IPO in 2018 has just been completely downhill. I know there has been a lot of opportunities to make money, mostly on the short side though. Mostly put options have priced up very, very high. A lot of profit taking over there. But I do think there has been a shift in sentiment. There has been a shift. There's been some changes I've noticed. And I also want to discuss the very unique opportunity NIO does present to investors. Right now, it's currently trading under $2.50, okay? I was reading an article yesterday about the top 50 stocks from 2010 to the end of 2019. A lot of these companies on this list you will surely recognize: Netflix, LendingTree, Amazon, Nvidia, Domino's Pizza, Broadcom, and several more. Where 9 or 10 years ago, these companies were small, they had small balance sheets, probably weren't kicking out the best earnings, and from 2010 to 2019, most of them have seen well over 1,000% increase. I think Domino's Pizza pretty much kicked everyone's butt. They have over a 4,000% increase. And so that really inspired me to put a well thought out stock analysis video together for NIO for the year going into 2020. Again, let's be upfront about a few things. Everybody's financial situation is a little different that's watching this video. So let me just throw a number out there and you can scale this to your personal life. If I had $1,000 of cash in an investing account, it would not bother me at all to put $50 or $100 into NIO stock, not watch it every day, check in every couple of weeks, look at how it's trading, keep up with earnings, and perhaps NIO could make that list. It does have the ability and it does have the share price where it could be one of the best trading stocks by maybe, let's say, 2030, 10 years from now, at the turn of the next decade. Like I said, I'm not guaranteeing this. I'm just saying, if you had $1,000 in an account, you put $100 into NIO stock, I don't think the course of your life is going to change too much either way. If they went bankrupt, you just lose $100. But if this stock does, let's say, trade itself back to $4 or $5, and then it takes off from there, this company grows over the next decade, that could become a very big position one of these days. So let's jump into NIO stock, guys. It's down 70% over the past year. Let's give everything a good look, do a wellness checkup on NIO stock. Before we get started though, make sure to drop a thumbs up on this video. I appreciate all the support. And make sure to subscribe to the channel if you have not done so already. So I gotta start here with this chart pattern, okay? Been all downhill pretty much since the IPO. Of course, it did see this high in March where it got up over $10 a share. Like I said, really since that time has lost roughly 80 to 90% of share value. Now, some people do feel like we have hit a bottom here at $1.30. This came on the 30th of September. Has been propelled back up and we are starting to see a bullish chart pattern now. But as you can see, over the past month, NIO's up roughly 30%. And guys, I just feel like it has so much room to rebound where they do have to correct their financial problems. They have to get a lot stronger on earnings. Let's go back to October. Let's take a few steps. I want to cover a couple of things that has actually pushed NIO's stock price up quite a bit. Have we seen the bottom? We honestly don't know that. I remember when NIO was trading down to under $1.50, there was rumors and talk of a reverse split. However, those rumors never really materialized, and as far as I know, NIO never confirmed anything, and it was a good thing because NIO never got itself under $1. As we all know, once a stock spends 90 days under the $1 range, it can be delisted by the New York Stock Exchange. So my thesis here, guys, you might see a pop on earnings, okay? Why I mention that is because back on the 5th of December, it was announced that the China-based electric vehicle maker disclosed an uptick in November deliveries. Now here's the part I really want you to pay attention to. That was a 4th straight month where they seen an increase in deliveries, okay? So that is very, very critical to having good earnings. The more vehicles you deliver means the more you are selling, the more revenue your company can potentially bring in. The company said the delivered 2,528 vehicles last month was up from 2,526 in October. So just barely up, but it is still an increase. So still moving in the right direction. If you look at it on a quarterly earnings basis, I think you should see NIO stock move up higher after this next earnings report. Again, I would not gamble on it, but I do think it, based off of the delivery numbers, you should see a move up in the stock price. Back in November, this is really when you see NIO start to move. It was up 30% on a next level deal with Mobileye, a strategic collaboration on the development of highly automated and autonomous vehicles for consumer markets in China, other major territories. So this partnership will see NIO engineer and manufacture a self-driving system designed by Mobileye, building on Mobileye's Level 4 AV kit. Now, this is something you can look forward to. I think people see this stuff, they think, okay, this stock is about to fly, and unfortunately, that's usually not the case. This is something you can tuck away, that you can be assured to keep up with NIO and Mobileye are working on this together, and it could provide a very big future to be very competitive with Tesla and other self-driving vehicles. This article was published yesterday. Now, I think this is actually, in my opinion, probably the most important piece of news really to do with NIO and most all Chinese stocks. And I'm talking about short term, okay? That's why I would not be afraid to buy some stock here under $2.50, is that shortly after it was announced that China and US announced a trade deal has been struck. Now keep in mind, those details have been very limited. We do have a trade deal in principle, but the optimism could tear close to what trade deal cooling will mean for the Chinese economy. That's the sentence I really want to pay attention to, is that a strong trade agreement between the United States and China could really unlock the Chinese economy, and I really expect to see a big move out of all Chinese stocks. So I'm talking about Tencent, Alibaba, Baozun. You know, you can throw NIO in the mix. It also was announced earlier in the week that NIO received goods from Beijing when the Chinese government said it's lifting its 2025 sales target for electric cars. Try to keep your expectations into check. Don't start penciling in all these gains before they happen. I just think several catalysts have come together in a short period of time that could potentially push NIO stock up quite a bit, maybe even double the stock within a year's time, maybe more than that. So this is where we do need to see improvement. And guys, a lot of this can be blamed on the Chinese market. The level of manufacturing and sales has kind of been kept in check. I'm sure that the US-Chinese trade agreement and of course the trade war has probably put a lot of downward pressure on many of these stocks. I know Alibaba has really been kept in check a lot, but NIO's guidance has been basically flat since they IPO'd. As a matter of fact, this first quarter when they missed by $5.95, they did have a quarter one beat in 2019, followed by another EPS miss. So with these delivery estimates being met and exceeded, I would like to see this EPS number get out of these negative numbers, get into the positives. And I think if it can do that, we can see a good earnings report. Obviously, NIO stock is set to run. Again, I don't want you to watch this video and run out, load up on NIO stock and wait for the next earnings report and hope this all happens. That's not the true essence of investing. You have to understand sometimes these things take time, even on good delivery numbers. But if you look at the trend Tesla set, where Tesla, their delivery numbers started coming up month after month. They just had their best earnings report in company history. So it is possible that it could happen. And now another big problem that NIO needs to overcome is their earnings are way into the negative in 2018, and their revenue is just barely on the positive side. So we do need to see a lot more efficient numbers there. Again, this is a startup company. We can't expect Microsoft and Google and Apple type of numbers just yet. Then again, this stock is down 70 to 80% from its IPO pricing. So it might be a very good time to invest where you are inheriting all the risk. That's where you should reap the most return. Again, this is just kind of an extension of what I just talked about. Very highly negative on profit margin, no operating margin. Return on assets, return on equity, both heavily negative. I did mention this in my NIO versus Tesla video, where Tesla is a lot more organic, it's a lot more profitable, it's a lot more investable. Then again, you got to remember Tesla traded all the way down to $170 over the summer, and now it's back up over $350. So there was 100% return if you would have bought Tesla over the summer and sold in this past week. Again, Tesla's numbers are a lot better here. So if we do see some general improvement, we see their profit margin start moving towards a positive number. We see that return on assets, return on equity start trending towards a profitable number. Again, that will significantly move the stock. Right up here at the top, the short percent of float. 20% of all shareholders are holding NIO stock short. What does that mean? On any positive news, this stock will fly. It's going to cause a short squeeze. Positive news, those shorts got to get out of that position, and there's a lot of that is put options. People holding long-term put options on NIO. So they're going to have to move out of that position, which in turn makes the stock run even more. It's viewed as the same exact thing as buying the stock is when shorts walk away. When shorts cover on their position and move out, that is more float going back into positive shareholding. This number goes down and the stock price goes up. I do think that NIO is still a hot mess fundamentally. I will not deny that, but I think most of the risk has been priced out at this point. Maybe not, maybe I'm wrong and it does have more room to fall, but for now I feel pretty safe, and considering those delivery numbers, I would not worry a thing in the world about taking a position here under $2.50, and let's just kind of see what happens over the next 6 months to a year. Thank you guys for watching the video. Drop some comments, let me know your thoughts and opinions on NIO. Would love to hear that. Make sure to check out Trade Alerts Pro. It is the first link in my description box if you are interested in getting further education in trading and investing. Thank you as always, and have a great day.